What's going on, everyone? I want to give you guys a quick example of a strategy that I use each and every single day. And if you guys have watched my YouTube videos before, you definitely know the strategy. It's the 20 SMA strategy. We're looking for those breaks and closes with confirmations above or below. And then we're kind of correlating that with where are the other areas of supply or demand at and how much space do we have if we actually confirm and get down. Depending on if you're an intraday swing trader where you're holding for bigger moves or you're a scalper, this strategy will definitely work out. Now, I do have to make a disclaimer that this is not a move that I'm going to sit here and say that happens every single day. Okay. So if you look for this strategy, don't expect it to do what it did today. But the key point that I want you guys to walk away with is that if you have a strategy or an entry or a model or whatever it is that you want to call it, make sure that you fully trust that strategy each and every single day. Make sure that you manage your risk accordingly based on what the price action is giving you. So if you have a setup that is requiring, let's say, a bigger or a wider stop loss, it doesn't mean trade bigger size. Okay. Have some common sense, size down. That way you can absorb the wiggle room and you can actually hold these trades out. Maybe it starts off as a scalp that turns into an intraday swing trade, like you're holding it 2 or 3 hours later. Today is a perfect example of a 20 SMA play that was absolutely fantastic for 100 points. Now, I'm not going to sit here and say that I took this trade for 100 points. I definitely did not. On the size that I was trading today, I managed to lock in about $331. Is it a fantastic day? Not really. Is it a good day? Absolutely. Any day you finish flat or green is a good day, or even with a small loss is a good day. But I want to show you this just to bring it to your attention, to reflect on it and show you how it would have worked if you put yourself into the trade. So notice the first 5-minute candle of today. We're looking at the NQ chart. We're looking at today's price action. Today is September the 24th. Look at the first 5-minute candle. Big spike, which was a trap. A lot of people probably tried to go long here. Again, I definitely don't recommend trading with inside that first 5-minute candle unless you're really, really experienced or you have a dedicated strategy to trading the open inside the first 4 minutes, 4.5 minutes. If you don't, definitely let the dust settle and then try to find something after that. But look at the first 5-minute candle. It was, again, a 70-point range candle. Now, this is where things get a little dicey, because a lot of people are going to look at this and they're going to say, well, based on how I trade, there's no way in hell that I'm going to take a trade with 70 points worth of risk. I agree. If you're trading a mini contract, you're trading 2 minis, you're trading 5, 6, 7, 8 micros, yeah, maybe you don't want to give up that amount of points. I get it. But what really is a stop loss in terms of points, right? What